Call the Finance Committee meeting of the Columbia Economic Development Corporation to order. First order of business is the minutes from the February 17th, 2026 meeting. And everybody's had a chance to read them. Any comments or questions? If none, I'll make a motion to approve. Second, all in favor? Great. Next is the treasurer's report about financials for June.
Yes, thank you, Brian.
Sure.
I'm going to turn it over to Mike. Mike prepared the documents for this meeting, so I'll let Mike go through it so you guys can get an accurate interpretation of it.
Thank you very much. At the bottom of the stapled packet is a copy of the balance sheet. And we're going to give you the P&L that has the correct comparison to the budget as which we'll go over after we look at the balance sheet. If you look the balance sheet halfway down on the back side of the first page, the second page, you'll see that we have total assets of $5,777,000, up $318,000 from last year. The bulk of that is $112,000 in the CEDC loan cash account, and $113,000 in the loan loss reserve account, and $67,000 in the SBA cash account. So when that gets you almost to the 300,000, and increase in loans receivable of 106,000.
Hey, Mike, you're going through the P&L that was just handed to him?
No, I did the balance sheet first because I was waiting. I didn't know what Steve would get the P&L here first.
And where's the balance sheet?
It's a separate handout at the bottom. Let's lift up your top.
Balance sheet, thank you.
All right. So again, you see that our balance sheet is significantly driven by our loan fund. If you look at the bottom of the first page, accounts receivable, we did have at the end of June $179,000 in receivables compared to $126,000 last year. Jonathan and I reviewed that, and fortunately in June we did get paid the $150,000 for the FBA. We are receiving $120,000, which is the third quarter payment from the county on Thursday of next week. So we'll be back at a stronger cash position. On the cash position, right now we're down $45,000 from where we were at this point last year. One of the things that is going to help improve the receivables as well as the cash is the Industrial Development Agency closed on the Blue Spruce Apartments project, the $7 million project across the street from Golden Harvest. They're going to convert that motel into 51 housing units. This IDA received a $70,000 fee. We're discussing, we're going to propose to the IDA that they pay us from those funds the money that they owe us for the deferral of our operating management fee for the last 2 years, as well as the $7,000 that would be due to us under the contract, where we are entitled to 10% of any IDA fee that they receive up to $25,000. So we'll be able to clean that up and still leave the IDA with more money than when we started deferring the money. We also have several IDA projects in the hopper. The land bank.
That's 46,000. That's on the balance sheet as the receivable.
Yeah,
Plus the 7,000 closing for this project.
15,000 from the land bank is in process with the county, and the 41,000 under Columbia County really should net out to a zero because there's a liability there. That's the third. That's the June portion of the county's quarterly payment. And the Hudson IDA, that would bring us down with receivables to the 72,000, which is the March quarterly requisition under our SBA grant, and the 4,500 from the city of Hudson. So we'll be in much better shape. We were almost $200,000 in receivables before the Feds paid us. On the liability side, our accounts payable are a little bit higher than normal, 27,000 more than we had at this time last year. And our accrued expenses are down, but that's because we pay out the retirement benefit in June and in January, usually January and July, but we booked it in June this year. So it's about $24,000 a year, the 5% retirement benefit that the staff's entitled to as a benefit. Other than that, we continue to, I think that this does show how dependent we are on the loan fund, but it also shows how hard Martha and Steve work to continue to get money on the street. It comes back as fast as we can get it out. We are at about 35% cash available to lend and about 65% on the street. We've also discussed this over time, as you know, that put it out faster than that, you won't have money next year because the money doesn't come back in fast enough. And Steve and Martha have done some analysis. It's still about $600,000 a year that we have to put out on the street combined to stay ahead of the game. So, and at $25,000 pop, that's a significant number of underwriting and loans. I believe we also have about $250,000 yet to draw from the SBA. 350. And we don't book that as an asset until we draw it down. But if we did that, we'd see another big jump here until we can get it out on the street. Any questions on the balance sheet? If not, Steve just gave us the profit and loss report where it's compared to our current budget. In the administrative revenue side, you'll see that we're $70,000 over budget. That's primarily because we have booked receivables against grants that we have spent money on, and we're processing reimbursements with the state. The Kinderhook Forward grant is where we're managing a small business grant program as part of their New York Future Forward program. It's $300,000, and we're entitled to a fee, and this is the amount of fee we're currently entitled to. The big jump, of course, is in the wireless grant. You'll recall we had a $120,000 grant from the state to do broadband. Broadband is moved so far to completion, although there are still about 500 addresses left unserved. We convinced the state to move that to a study of cellular service in the county. And the first phase of that is completed. We're entitled to a $60,000 reimbursement, but we're gonna have to pay the vendor so that we can submit for reimbursement from the state. It's intended, the reimbursement is submitted and intended to be approved by the New York State Economic Development Agency next week. In the past, we hadn't booked those accruals, and it just made us look like we were way out of sync on our bottom line. So, last year we had $100,000 more at this time in the year because we had $45,000 in housing money, and we had $75,000 in Columbia Forward money. And you remember the county did increase our appropriation by $40,000, but we were getting $150,000 under New York Forward, or I'm sorry, Columbia Forward, and we're getting $90,000 a year under the housing. allowance. We're making that up by, the additional funding that we're receiving, from the land bank. And, you know, that's, $60,000 a year plus the 40,000, so we are making up the 90 on an annualized basis. There are several items that we hadn't budgeted for. We received, grant money, from the state, under the land trust, which is a pass-through to the Columbia County Land Trust, which is known as Trillium. There are corresponding expenses for that $10,000 that washes it out, but we did show it as a income and expense item rather than netting out, the due to from. Bank interest, we're down. We did, start noticing that, KeyBank had changed the method of, accounting, and somehow either we are now in a level of service where they net out the interest and fees, so it's almost, we have to dig down to find out how much the interest is and then all the fees that they're charging. And it started going negative, and I'm like, we have $1 million in the bank. Part of the problem is, we have 13 accounts because we have, all of the SBA accounts, and at any one time, they could have anywhere from $250,000 if it's the day we draw it down to zero, 3 months later when we put it on the street. So, Jonathan and I did look at this as an opportunity, to rationalize our banking relationships. And I did have a conversation with the KeyBank customer rep as well as someone from their money department. The money guy, money manager thinks we're over service. We don't need Key Navigator. He said, you're paying big fees for analysis. You're paying fees for, and he said, your KeyBank small business account can do wires and ACH just like you're paying big bucks for on the other side. So we're gonna review that. The relationship at a Bank of Greene County, there are 2 SBA tranches there, so we have 4 accounts, one for the loan loss reserve and one for the revolving loan fund itself. And we have a reserve account there for operations. The 2 SBA tranches, which are 4 accounts, they'll be closed in September. So again, we can look at whether and Community Bank seems to be giving us the best rate, but we're sitting there with all of the CEDC loan money available to lend. So it's like $800,000. So that's easy for them to give us in 2 accounts, the level of interest that you can't get when you have 13 little accounts that they can't aggregate. So we are looking at that.
And there's another angle to this same project that we started with this, which is rationalizing the accounts to drive up our interest, but also to comply with to minimize our risk for the amount of money we have in any banks above and beyond FDIC. So,
and as I explained to Jonathan, every year we get reminded by the auditors. Recently in my role at Ulster Savings, they were telling us about a program that now there's an entity that does this for banks. And they basically, you deposit money with them and they spread it.
Yeah.
And I think a lot of the banks just say they didn't know. I think they told their line staff to just say, you don't know anything about this. And then if they push you, we'll figure out how to do it, but they've got to be able to do it because other people are asking for it.
if you come in with a withdrawal slip, that's when you get your attention.
Yeah. So, Martha had discussed over time, with me that, once you set up the tranches with the SBA, it's not worth bringing attention to ourselves that we're having a relationship issue with our bank by closing those and trying to open them somewhere else. So we'll work through this as those tranches, evolve. We also, as you'll recall, we looked at, and the board approved moving the interest from the SBA accounts, in 2026 to the reserve account to ensure we had a line, our own line of credit, if you will. what we realized was, in many cases, we've kept these tranches open longer than we needed to because we left the interest in those accounts and then we relent it. And it's actually probably more, we'll bring this up at Jonathan will bring this up at a future finance committee. Perhaps that money gets moved quarterly so that we are now in a position of telling the SBA we're out of money and draw down more frequently. But if you had a $250,000 tranche and you had an extra $50,000 in that over 5 years, you didn't close it out at the end of the 5th year because you were still loaning that money out. But again, looking at the line of credit issue, raised that issue.
Is there any negative impact to not closing out the loan tranches that you have with the SBA? Like, they give you $1 million to
Well,
loan.
we can't because if you lent out the interest,
Yeah,
those accounts are still open.
and the SBA does
Yeah.
it based on the actual bank account itself, so there's still money sitting in that account in some way.
It's our money.
It is our money, as soon as we've paid off that 10-year loan to the SBA.
Yeah.
Yeah.
Please,
The,
yeah.
the issue is if you get to the end of the tranche and you have the $50,000 of interest in it and you make loans out of it, you could presumably consolidate that into the county loan fund, but that's an administrative burden. So now you have 3 or 4 loans in this thing for an extra 5 years that you don't need. So that will help reduce the number of bank.
Oh, you can, but you've paid off the SBA.
Right.
Yeah, but the SBA is gone, but we're still maintaining the tranche because we
Right.
were loaning the interest out and it extended the life of the account.
Yep.
Good news is that even though we're down $2,100 on bank interest, we're up $15,000 on loans. That's volume and the fact that we're at the 7.75% interest rate. The land bank revenue is booked down here. We're probably gonna consolidate that up under administrative revenue going forward. Now, we talked about the membership and sponsorship issue, and Jonathan has some ideas on that. In terms of putting together a task force, looking at best practices of similar organizations around the state. Without getting into having golf outings and galas and the things that other not-for-profits do.
Yes.
But, as you know, I've been disappointed with that process for a while. The other income are the small late payment fees, closing, if we charge a closing fee. Sometimes we waive the closing fees on the small loans. And, we're down $397, but it's a small budgeted amount to begin with. Again, the SBA loan differential. And I'm sorry, we're comparing this to last year. We're down because we got the bump on the half year budget. So our gross income for 6 months of 2026 is 640,000. Last year it was 645,000. Conference and training it's down. Consulting fees is up. We had an increase in consulting fees so far for April, May, and June by paying Patterns for Progress $3,500 a month for Chris Brown's time while we're looking for a replacement for our housing coordinator. Our employee expense overall is down 34,000, primarily because the CEO position was not filled on the same timeline that and because Chris has gone to a consulting line and Riley Werner is only working in a very small part-time position to assist us with newsletters and other matters while she took a job with a friend's company. And you'll recall we decided not to fill that so that the new CEO, or in this case, Jonathan, would have the opportunity to decide how to fill that position. Our grant expense, is down because we're not, giving half of the Columbia Forward money to the chamber. Because we're not getting it from the county. Insurance was up 4%, but, again, it's a small number. Land bank last year had not been set up long enough to, draw down money from the county through the state, or the state through the county. So we had expenses that, CEDC paid and got reimbursed for, but now they're on their own books. The micro enterprise expense is $7,000 less than last year, but Martha has invoices for people who, did work in June that and as we receive them, we'll book them and that'll catch up. They bill based on hourly, services, so we don't have an estimate yet of, the book in advance of the end of the month. Our new initiatives are up because of the $63,000 wireless grant expense. 57,000 of that is, anticipated to be reimbursed by the state. And you'll recall, that the board had agreed, to $1,000 a month retainer with that company. And, some of that will be able to go towards we have a $15,000 match on the 60,000. So some of the retainer will go towards that, being our share of the, grant money, as well as in-kind services from myself and some from other staff, that will, help us get the 15%, the 15,000 that we need, to be able to collect the full 60 on the grant. Office expenses are even with budget, but as I discussed with Jonathan, so that's probably the area we have the biggest, increase. And again, it's the, equipment, the leases, and, we continue to work to get arms around that. There was a credit on the EIDL, so that, it shows only $132 in interest this year. But that was, because there were other, credits when they reconciled year end as to what we had booked last year. We're down to about $35,000 on that EIDL loan. And you'll recall that we had taken $100,000 when we weren't sure if, the county was going to reduce our appropriation during COVID the second year. And we've been paying it off on a 5-year schedule rather than the 30-year schedule that you're entitled to pay it. And it's at 2.75% interest. The $7,000 negative miscellaneous expense, you may recall that we had a differential discrepancy between CEDC's book on the loan fund and what Down Home, our loan fund software, had reported. The good news was that it was we were able to figure it out at the end of the year. We now monitor it monthly, and the accountants had us in March create this expense. Initially, they put it under loan loss, but Martha and I said that doesn't. It wasn't a loan loss. It was an overbooking. And we didn't want to show that we had a loan loss when we actually hadn't experienced one. Legal and accounting payroll services are on budget. We do expect to receive additional billings from UHY when they complete the single audit, which will do some audit work on that. And they're a big part of our receivable because we don't pay them all at once. The interest on the SBA loan is just about what it was last year. And our net operating income prior to the amortization and the ROU asset expenses and adjustments, it's 36,000. After those adjustments, it's 31,727. And we worked with BST, who does the work for us that UHY can't do. I asked them if they could do it this way so that when, from an operating standpoint, having, you know, it was resulting in having negative $22,000 in rent. And so I said, that's, you know, I'm gonna have a board member say, what do you mean you have negative 22,000 in rent? And then they had 22,000 in interest because they had the ROU up in the. So I said, can you just net it out at the bottom? Got it. So, yeah, I think, you know, we're on budget, which you don't see here, but we look to you. Our expenses were 604 versus 626. So we're $22,000 under on expenses and we're $5,000 under on revenue. So, you know, what I was able to go through and show Jonathan was the fact that balance sheet is pretty stable and the P&L is very stable. And about $600,000 of our $1.3 million budget is non-payroll. And you know, we're getting ready. The county asked that we provide a budget in advance of their budget process, and I think it's August 15th, they want it, or August 1st. So we're working on the budget for next year. That'll help Lisa to get it approved before October so we can submit it to the ABO. And again, it's a budget. There have been times when we've refined this to go to January or board approval, but we're continue to be in good shape. And I think we'll always struggle with cash flow because if you look at our 11-year history, we have net income of $5,800 average. But we're not for profit trying to make sure all of the money we bring in goes to our mission. And by having the reserve account, which now is at 224,000, when we move the 6 months of interest over from the loan fund, it's going to be 300,000. It'll be about 350 by the end of the year. And obviously, we've never drawn from that reserve, and we hope we never have to again. But you're not going to have nightmarish things where Pat and I got down on occasion to $10,000 or $15,000 in the operating account. And you'll be able. We don't.
And the reserves, like, to give it context, so it's about 100,000 is our burn rate a month.
Yeah.
So even though 300,000 sounds like a lot, because we usually don't put much aside, it's only 3 months.
Yeah.
So it's still far below what would be considered standard.
And I think that, you know, it won't protect the organization from the loss of a grant or a loss of a loan program and, you know, we've looked at that over time as well.
Yep.
So, you know, I think, there are some, continued cleanup. Jonathan and I did discuss how to get them behind the curtain to adjust the balance sheet, so all the bank accounts are lined up. Rather than the way it's structured now, you really have to jump around to look at how much is in the loan program, how much is in the operating budgets. And continue to work with BST. That's one of those issues.
Good. Any questions on the June financials? Should we, you want to do a motion to approve even though we don't technically have a quorum? Okay, it's motion to approve the June financials.
I'll make a motion.
Second, all in favor? Good. Good. Next is the Form 990, that time of year, the annual tax return. I reviewed it. I thought it was reasonable, appropriate, consistent with prior years. Anybody have any questions or comments on the 990? Did UHY have any comments on the 990?
They did what they submitted.
They're signed off. Okay.
And they, as you know, with computers and AI, it's simply, they don't even prepare it. They push a button and the data that they've collected from us that they use to create our financials self-populates the 990.
The only thing I flagged, Mike, just to say it out loud, I noticed on Schedule B, which is the schedule of contributors,
Page, what page?
29 in the packet. And it's the same as it was last year, and I think I asked the same question last year, where Columbia County shows up as almost $1 million of total revenue. Are you bucketing non-Columbia County things into there just because they're
No, but
pass through
if
entity?
you remember, they were giving us, $460,000, then they were giving us $150,000. And they were giving us 90. And then to the extent that we get the micro enterprise grant from the county, the 300,000, that gets you up to the 900,000.
Okay.
So what it is it's the, you know, if you take 240 and 460, you're up to 800. And then when you take down the additional monies from this grant program, because it's passed through to us by New York State through the county, we have to.
Through the county, yeah, okay, understood. If there are no questions, then motion to recommend the approval of the 990 to the full board.
Or make a motion to recommend.
Second, all in favor?
Aye.
Okay. Cash flow, I think we
We
already
discussed that,
Touched on
and
cash
we
flow.
discussed the transfer of funds to.
Portfolio dashboard next on the agenda. The loan program.
Yep, so this was presented also yesterday to the loan committee. Loan client A is a restaurant that we're all familiar with. Loan client B, Martha's been in contact with, looking for a payment. Loan client C, waiting on sale of property or got our collaterals on. Loan client B and E, Martha's also been in contact with. And one other note, since this report was created, we did receive payments from loan clients D and E. So we're doing well on it.
Martha, with A and B, did we already write those down?
No,
No. You recall one is in bankruptcy and one is for sale.
in reserve, well, not resident.
Okay. But they're reserved,
Yeah.
Fully
fully reserved, no allowance, okay, great. All right, next on the agenda, 2025 committee evaluation, page 51 of the packet, it's like committee. All 5 across the board, so that's positive.
Great, that's
Right.
The best ever.
good.
Page 52 is the investment policy statement, I think in this statement, the evaluation. Okay, motion to approve the all 5s evaluations. Can I make the motion?
We could just make sure that we have a date adopted inserted here going forward. So that
On the investment policy, 1 second on that. Motion second, all in favor on the committee evaluation
Aye.
to accept it? All set. And then the investment policy statement, recommendation to add adoption date to the policy. So this would have been as of July 21st. And I believe again in the policy, it says it's reviewed annually. So any questions or comments on the investment policy statement? Seems pretty straightforward all.
I'll make a motion to accept it.
Second, all in favor? Aye. And public comment. Channeling my inner Jim Calvert, we always welcome participation from the public in these meetings. I don't see anybody on it. Okay. Any other items to come before the committee? Motion to adjourn. Second, all in favor? We are adjourned. Good.